is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be faithful to that which exists nowhere but in yourself. Market-wise, let's take a look at it out here. We had the Dow Industrials up 111, Nasdaq's up 31, S&Ps are up 11.5. Gold contract down $8.40, traded at $1,181 an ounce. Silver down 20 cents at $16.30 an ounce. Platinum down 13 at $1,131 an ounce. Copper flat at $2.92 a pound. Light sweet crude giving it up down $2 at $58.93 a barrel. Bonds, we have the 10-year up 10 ticks. 127.13. That's after rejecting lower price. 30-year up 1 point and 21 ticks at 155.31. Also rejecting lower price. King dollar up 585 ticks at 94.76. The euro is down 81 at 112. The yen is up 33 at 119.79. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay. Take a look at the SPY. We're up $1.15. It is 64 million shares. Downtown yesterday, what do you have? 135 million. What are you doing here? We're setting up a B2C of an ABC structure on the way down. I suspect what you're going to have here, and this is where the deviance is, folks, which is just so cool. You know, the SPY can basically get up to about 209.93. So that's about another 80 bucks, well, 80 cents over where we are right now. Now, what I expect we're going to see is this, is that more than likely the jobs numbers tomorrow morning is going to be bad. Why am I saying bad? Well, the ADP number came out on Wednesday, which was bad. Market will turn around and do what? Market will go up. Why? Because they'll think that bottom line rates are going to basically get pushed off longer, which they very well may. Bottom line, that pop up, that's going to be the sell. This is a market that wants to go downtown. We look at the 3 Qs. What do we have with the 3 Qs? 3 Qs out here, you're going up on 21 million shares. You're at 107.51. Bottom line, you go downtown out here with 42 million. And when we take a look at these and set these up on the weeklies, what you do have is that we still haven't gone anywhere. That's what's, you know, pretty wild, and you better keep that in context of where we are. The NASDAQ hasn't got inside the lower range. The S&Ps have. If we take a look at the S&Ps, we put these up on the weeklies, what you're going to see is that the, there she is, okay. So the S&P, we are at 209.13. That little baby, well, actually, you know, that's over it too. 208.47 is the number, you know, and bottom line is that it's going to need, you know, we went down with volume, but it's going to need more volume than that to get into lower price and to get that choo-choo train going. Small caps are also showing that they basically are bouncing on lighter volume. 23 million on the way up, downtown with 72 million. Gold contract, what do we have with gold? Okay, we're going to be coming into a Friday in the gold market, and I'm digging. Why? Okay, so check it out. What you had out here today, you had 123,000 contracts traded. You're coming into 213,000. This little baby is like set up to try to run into 12, 14 once again. So we'll see how this baby shakes out in the next couple of days. But coming into a Friday, Normally, that's, well, it's always really dangerous inside the gold market because gold stops trading when we stop trading in the U.S. and doesn't open until 6 o'clock in the evening Eastern Standard Time. Now, let's go over to bonds. Bonds, folks, are going to be releasing the most amount of information to us, and I expect that information will be tomorrow, though. Why? Because this is what we had today. There's good information that the bond market has released to us today, and what it is this. We've done 1.7 million contracts on the 10-year. That's going into the 1.7 million contracts from March 6th. We got into the low. We broke the low. You have more volume. So what does that set up? That sets up you're going to get a test of that low. Okay? First thing. What we're going to be looking for tomorrow is this. If you come off this low and you do have an expansion of volume like 2 million contracts in the bond market, that would be saying, guess what? The bond market is not done. However, you come off this low right now, and as we go climb up tomorrow, and you climb up and we do 1.7, 1.5, 1.4 contracts, guess what? That's saying that the top, well, it's saying the probability the top was in and is in on January 30th goes up dramatically. I mean big time, too. Because what we have here now is this. Watch the different dynamic. The different dynamic that we have taking place right now, and this is a change of dynamics, is markets up, bonds are up. That dynamic hasn't been out here years, okay? Bottom line, what do you normally have? Well, no, I can't say it hasn't been out here years, okay? Because bonds are up and the market's up. But the correlation, the direct correlation, when markets are down, bonds like to go up, vice versa. They've caught up with each other, no doubt. Now they're trading together. King dollar. Let's go over to King dollar, and you can see that the market likes it when King dollar goes higher, takes conniptions when it's going lower. What are we doing with King dollar? King dollar has an anemic bounce, and this is about as sick as you get. King dollar yesterday, we go downtown. We go downtown with 77,000 contracts. We're going uptown today with 42,000. Bottom line, what is that setting up? This setup here was the setup to go down to 92 just when it was breaking down yesterday. The way it's setting up right now, it's like, okay, yeah, you're going to try to really make a run. Yeah, she'll make the run to 92 first, but what this is opening up, because of the amount of cause building, is opening up the whole 89 area. Our phone number is 877-927-6648. Some of the high-volume stocks in this low-volume market. You get Whole Foods getting taken apart. That's down $4.70. Yelp is up $9. We'll pull that up. We get Caterpillar down 63. Oxy is off $1.83. You have Walmart up 44. Honeywell is flat. We get Big Blue up $1.17. 3M is up $1.12. Let's go over to Yelp because Yelp is yelping out there, helping. Please help my stock price. Bottom line is that it's up 20% right now, and what that's all about is that Yelp has said there. Let's see. Yelp, the consumer review website, is working with Goldman Sachs to find a buyer. A person with the knowledge of the matter said the $3.5 billion company based in San Francisco may draw interest from suitors including Priceline, Yahoo, Amazon. Bottom line, folks, is that that's right. As our man, Mr. Dave White, says, they're going to say anything and everything to basically keep this baby going. Yelp is a horror show, folks. Absolute horror show. Technically, the stock's gone from $101 down to $38. Fundamentally, bottom line is that they came out with their numbers and they told the world that, hey, listen, you know, they have problems, and the problems that they have is that the shift from using our computers to using our cell phones, okay, is pretty intense. And that intensity is hurting them inside the marketplace. Let's go over to the oil market. We take a look at oil. Oil came off that high, and it looks like we'll see what it shakes out. So oil yesterday, it spiked up into the 62.58 area. Right now, we are trading at 58.90. You have 3.7 million contracts. Yeah, this thing's not done yet. The way this is set up, it's really not done yet because we had some good juice on the way up yesterday. You know, you get a pullback, but this was a one-way move, no doubt. This move from $45 all the way up to that 60. Might get a pullback. Love to see another test of that 60. to $62 area. That would be a nice heads up. Silver market. Let's go take a look at silver. We're going into this Friday, of course. It's gold, silver. We're going to have action there. Silver. I like what's still happening at silver too. We just very well may have a nice little update tomorrow. What did silver do? Silver's back down by 35,000 contracts. It's going into 46,000. So you are building some cars there. And of course, the silver market. You talk about volatility. The silver market has extreme volatility in spades, big time. The GLD, we can take a look at the GLD. What do you have with the GLD? That's also backing down with dramatically lighter volume. We have 3.4 million shares. That's backing into 9.4. You stay right there, folks. We'll be coming back with our man, Mr. Steve Rhodes. Dow Industrials right now are up 98. NASDAQ's up 29. S&Ps are up 10. Gold's down 8. Silver's off 20 cents. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials up 88, NASDAQ up 25, S&P's up 8.5. And don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. Get us right on your cell phone, TFNN.mobi. And our man, Mr. Steve Rhodes, he does an outstanding show every trading day, 9 to 11 Eastern Standard Time. Now, Steve also is going to be doing 2 workshops, okay? These workshops, folks, it's a 2-part webinar series. It's the psychology of trading. The first one is tonight. That's going to be starting at 6:30 Eastern Time. Go to 7:15. The second one's going to be next Thursday, May 14th. Same deal. Both those workshops, folks, are only $97. You can come over to our website at TFNN. You're going to see it right on the very front. Hit that. You can be in that workshop tonight. Now, if you can't make it tonight, don't worry about it. Why? Because it's going to be on your page for 1 full month, okay? So you can go over this as many times as you'd like. Steve Rhodes, what's going on?
Two-way trading market, baby. Two-way trading market.
There's no doubt about that, man. It's a little trader's paradise, right?
It really is, you know, and for folks like us, for the folks at TFNN that are so focused on different patterns out there, you know, whether it's just volume at swing points, whether it's power law vector indicator, you know, ABCD patterns. It really is great to watch. As yesterday, you and I talked about how, from my trading standpoint, I really had to shorten up the leash, so to speak, and go to shorter term charts. And a few weeks ago, it was the 30-minute charts that were working just like clockwork with regard to patterns out there. Then they started to fail, so that just forced me to go to a little bit larger time frame. Now it's the 2-hour charts that are working really, really well out there, at least with regard to the patterns that I trade.
Yes.
So it's and it's going in both directions, and it actually just fits in so well to the workshop that I'm doing that begins this evening, because it really, you know, when you have a market that has come down hard like it has for the last few days, and you get those patterns that set up, you always have to look in the mirror and, you know, are you ready to pull the trigger? I mean, this is what you would be waiting for, right? If you were anticipating that pattern, you'd say, this is what I need to do in order to either, it depends on the time frame you're trading, but either close out, start a new position, go the other way. And it doesn't get better than this.
And folks, you know, yesterday, of course, we have a Tiger's Den, okay? And what the Tiger's Den is, folks, the trading room. You should go over there and test drive it, because specifically, you know, I had interviewed Steve yesterday, but he was in the Tiger's Den yesterday also, and specifically when he was in the den, he was talking about that the waves down inside the NASDAQ composite, the NASDAQ futures, was like, hey, man, this is it. You know, if this is going to be a bounce, this is going to be it. And I mean, listen, you know, you were right there, man, and you hit it nice, man.
Oh, you know, and that's what that was on the. I think that was like on the 30-minute chart. And then I woke up this morning about 5 o'clock. You know, futures were up 125 points or so. So now I'm like, hey, this is great, because I knew the pattern on the longer term A to B equals CD, like you had called it yesterday. I knew that was setting up, and so it's kind of like, and it's almost just the opposite. You know, when you're short, you're like, okay, futures are down, and which, by the way, I don't know if you know this, but I did have to join your camp again.
I heard. I saw that beer rug come out, Jay, and we had a party.
I'm good. I had a dry cleaner was going to charge me more if I kept that rug there, so I had to go get it on Monday.
Man.
But anyways, it's, you know, it's so from the and being short also, and it always depends on your. So my short position is more of a positional trade. So, you know, it's what my anticipation is over the course of the next several weeks out here. But that doesn't mean that I'm not trading around it. No,
there's no doubt. You know, what Steve's bringing up here, folks, okay, people have a wrong conception, by the way, of, like, bears and bulls. When you're a trader, what happens, particularly, okay, when you're a trader and you have a market that is going south, you know that it wants to go north also. And what I've found is this, Steve, okay? I've found that that's when, you know, you talk about, unfortunately, folks that can't operate, and most of the time it's a lot of longer-term people too. Do you know what I mean? And they just stay in the position.
Yes.
But what happened, folks, is that's when, as Steve started, it's a trader's market. So you're trading on the way up all the time too. It's like not a big deal. It's just, you know, that's like another shot. I mean, the largest day I ever had in the marketplace, even though we were shot all the way down in 2007, was that we went long the night before the market was up $900 in the morning. I walked in here and I thought I was seeing things, and then of course we sold that and went short again. It's like, oh my God! But that's what bad markets do, you know.
No, it is, and always in my newsletter service, you know. I mean, everyone knows in a newsletter we've taken a positional trade and the reasons why. And this morning when they got the newsletter at 8 o'clock, they knew to anticipate that the market was going to bounce, you know. And with with futures being down, probably at that time at 8 o'clock was around 95 points or so.
It was nasty, yeah, right.
Yeah, but the cool thing is it's patterns, and you know, and I've worked you know, whether it's through the different Master Trader series programs that we've done and teaching people the patterns that have a high probability of working, and even though I've worked with a lot of traders, a lot of listeners. Even when we take a look at all those patterns out there, the most common question is, to me, is why can't I pull the trigger, Steve? Or why did I get in and then maybe get out too early? And the answers are not as they're not what everybody thinks out there. And it really has to do with that psychology of trading. So for me, this is really completing the full circle.
Sure.
In fact, when I believe that when you asked me to and hey, would I be interested in doing a radio show? Boy, that was a trip.
Yeah.
You know, from when I started to where I'm at now, I'm just kind of like, are you kidding me?
Isn't that cool? I know, totally. Yeah.
And but the nice thing is back then, in order to try to make a little niche, inside TFNN, it was really about the money management piece of it.
Sure.
It really was about the psychology piece of it. Even the radio shows used to be a little bit more about the psychology of life and trading. And now this is my opportunity to really come full circle. So for anyone out there that is struggling with any problem in their life, it doesn't matter whether it's trading, there's a certain set of tools and strategies that can help you to break through. And that's what it is that I'm going to be sharing with folks tonight. And the reality is we all have things. We're all trying to get more.
Totally.
I mean, if you're not, you're basically
dead. Want it to be better in every way, man. Yeah, totally.
Yeah,
man.
Yeah. So that's really what this. It's very unique from anything else that certainly anything else that I've done here with Inside TFNN. So it's really something available to anyone in life. It'll be the best $97 that anyone will have invested in themselves, and quite frankly, they can spend an extra $35-$40 to get the newsletter service for a year, and they can join me along with you, I think, and Basil and David and everybody else in the bear camp out there.
No doubt. And folks, the way you do it, come over to our website at TFNN. You're going to see it right on the front page. Okay, $97. You get 2 great workshops, one tonight, one next Thursday night. And the bottom line is that you can go out there and basically get his newsletter. And if you have his newsletter, folks, you're going to be in to the workshops for nothing, because this is a subscriber event. So that's another way you can do it, and you get great information for a whole full month, man. So
yeah. Hey, gold and silver, truly, it's amazing how it's under the gold has been closing price of gold has been about within a $20 price range for well over a month now.
Oh, I know.
But I'm watching that GDX. I don't have the chart up on the screen.
Yeah.
But it actually came back against the support area. Maybe the GDX is telling us that finally these metals are going to take off. We'll see tomorrow.
I like the setup, man. It's so deviant, man. I like it when it's deviant.
Is it? Hey, thanks, Tom. Have a great day.
We look forward to the webinar tonight, Steve.
All righty.
You stay right there, folks. We're coming right back. Dow Industrials are up 88. Nasdaq's up 23. S&Ps are up 8. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the markets, folks, okay, this is about as cool as you get, meaning that the volatility's out here. When you take a look at the, let's go over to the XLE. So The XLE, you know, what it had done is this. The XLE is, you know, basically has got crushed. You know, you talk about coming off the high, you know, the XLE basically was telling us that the oil was going down way before it actually went down. The XLE is trading at 80 bucks. It's off the high of 100. Now, what it did is this. When you take a look at it, we just came back to ice. That's all the XLE could do. And the downdraft that it was coming into was pretty intense. So when we were coming down in October of 2014, you were coming down on a weekly basis. No, well, oh my God. Forget, let me put this on a daily for you first, because you'll see how clear this is. It's clear on all of the aspects, but it's really unusual when you can come down this hard and you just come right back into it and it can't handle it. So on a daily basis, we were coming down with 60 million shares and with 69 million shares. Well, we went up to that level, folks. Each and every time we're going up to that level, it was trying to bust through that level since April 15th. April 15th, kind of, we moved sideways almost the whole month. You always got to remember, there's an average of 21 trading days in a month. Bottom line, tried it the whole time, couldn't handle it, 16 million shares, and then what does it do? It comes off the high, now you get volume again. What you're going to see here is it's going to go down to the bottom of the consolidation, and this is what the oil stocks in particular like to do. That if you like to trade consolidations, oil stocks are a great vehicle to trade them, because you can see how large this consolidation is. When you're talking about, you know, an ETF, 70, let's say the low 71, but let's say you get in at 75, you not get the whole full bottom, and then you're selling on the other side at like 80. That's a nice consolidation, folks. It's particularly a nice consolidation if you want to get inside the option market, okay? Because what ends up happening there, of course, is that instead of putting up, you know, 80 bucks, what you're doing, which is just pretty phenomenal, really, is that you're putting up all of 75 or 80 cents for whether it's the calls or the puts. You know, that is a nice situation. And if you haven't traded the option market before, bottom line, you know, you can get over to Thinkorswim, TD Ameritrade, Thinkorswim. They have some great videos on their site. If you haven't test drove the platform yet, test drive it. They get great videos on the site. They get swim lessons over there every day. Huge. We get a great show on Tuesdays, 12 to 1 Eastern Standard Time. A lot of great information. Bottom line is that what you have there is that you have something you can be trading at $1 to 95 cents, and you get the movement in it. The movement in it, like just from 2 days ago, we've gone from 83.66 down to 80. You know, so there's good movement. Particularly why I like the XLE and the oils in general is that you only really have to get Chevron and ExxonMobil basically right out of the whole XLE. So inside the XLE, the weighting structure is skewed to those two in a big way. They're 30% of it. So it's a decent one to trade. We go over to the XLF next. We take a look at the XLF. Bottom line is that the XLF, that little baby, continues to stay up into the top of the consolidation. It hasn't been able to hit its highs. And I suspect what you're going to have here is that, number one, it's not going to hit its highs. And what does that have to do with, folks? That has to do with, number one, people selling it. Number two, the amount of fines and legal costs that are still embedded inside of the banking structure. That's how that seems to be straightened out in a huge way, not in a small way either. You're gonna love this. This is absolutely one of the best quotes that I've heard in a long time, and this is what it is. Dan Loeb is a huge money manager, folks. Okay, hedge fund manager. He runs about $17 billion. Okay, and yesterday, so here's the hedge fund manager Dan Loeb said he enjoys reading Warren Buffett's annual letters to shareholders of Berkshire Hathaway and finds the billionaire full of inconsistencies on topics like hedge funds and taxes. So check this out. I love contrasting his words with his actions, Loeb said at the Skybridge Alternate Conference in Las Vegas on Wednesday, a gathering of hedge fund managers, former politicians and celebrities. But I also like how he criticizes hedge funds, yet he really had the first hedge fund. He criticizes activists. He was really the first activist. He criticizes financial service companies, yet he likes to invest in them. He thinks that we all should pay more taxes, but he loves avoiding them himself. I mean, it's just a great quote, okay? It is just absolutely amazing. It really is. So Berkshire is among the biggest investors in the U.S. banks, has multi-billion-dollar stakes in Wells Fargo, Bank of America, Goldman Sachs. And, you know, bottom line is that that's a great quote. It's absolutely a great quote. And folks, the bottom line is that it's a fact. You know, don't do as I say, do as I do. And the bottom line is that, you know, Buffett is the slickest PR machine out there. There's no doubt about it. And each and every time when I heard his partner, Charlie Munger, turn around and said that the best education that you know, kids can get out there is to go get a job at McDonald's. That's the perception of the super elite. And what ends up happening, they make like they want to be the, you know, guy in the street, and it's like not even close. They're so warped out of it, okay, that is their deal. And, you know, thought it was a great quote. Huge quote. Okay, so let's go take a look at the commercial real estate. So we go with the IYR, and what you're going to see here, this is where you're going to be able to take advantage, folks, of huge bounces in the marketplace. You know, because we're only at the beginning of a little trader's paradise here. The IYR, which has already gone from 84 down to 74. You're doing a bounce out here today. Anemic volume on the bounce. We do 9.1 million, and we're trading at 75.38. Now, this baby can get up and into 76.33 in a heartbeat. So watch how that goes. And what you're going to do with this one, all right, and this is when you can... You take the IYR, and inside the IYR, folks, okay, these are the large malls, you know, huge companies, okay, apartment complexes, but really commercial. You're going to take that IYR, and you're going to take the bonds, and the correlation is pretty cool because they move with the bonds, okay? So you get bonds bouncing today. This is bouncing today. When you think bonds are coming up to the high, coming up to a swing point, have lighter volume, if you think this bonds are a sell, another way that you can do that is you commit to the IYR and you fire off a short position in the IYR, or you fire off an option trade in the IYR. The IYR also, what does happen is this, which is really cool. The IYR, most of the time, has low volatility inside that option market, okay? So, you know, it's liquid, big time. You have the low volatility inside it, which is really sweet. Not at all times. When it moves intraday, the vol will go up. But when you're coming in the morning, that volatility normally is pretty good. And I expect that this little baby, so that's on the daily. Now, we bring this up and we put this on a monthly, and what you're going to see inside the IYR is this, is that the counter trend bounce, let's say, gets you up to 78. What this hasn't been able to do, and this is why it's crucial to really wrap your head around it, it hasn't been able to get over the October 08 high, number one, September 08 high. It came into that area with dramatically lighter volume. We came into that area in January, and we did that with 201 million shares versus 413. So what does it set up? It's not that it's going to go get croaked, but guess what? It sets up like a 61. So when you're at a 75, you can do a bounce to 78, and you're setting up a 61 on the downside. That's a good situation. What you have, that's technically, fundamentally what you have is this. And I brought this up a few different times. The way that the mall creators make money, and that's why, you know, many folks thought that they were going to fall apart even in 2008 because they had so many loans outstanding, and they did. And this is where they made money hand over fist. So check it out. They had all these loans outstanding at what? At higher rates. Bottom line, they got to refinance all those loans. Those loans were going down from 9%, 8%, getting into 4%, 3%, prime plus 1.5%. That's what they had. Okay, so that's on their books. That keeps the cash flow going, right? But what the problem is with it now is that when they're doing new projects, they're always selling forward. And if that 30-year, 4-year bond market is over, which I believe it is, that game's going to change. And the beginning of that structure, that game is going to basically hurt them. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.com tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. And we're going to have lots of numbers coming out after the close for you out here. Now, let's go take a look at, let's run through some of these numbers first. We're running through the ups versus the downs. And what you have is this. You get some decent stocks that are up pretty good today. You get CCL Industries, that's up 8%. You get, Valiant is up 1.5%. You got Magna International up 4.5%. We have SNC up 5%. Manitoba is up 7.6%. Intertape is up 9%. Now watch the downs, though. The downs continue, folks, to get taken apart. Priceline is down 4.5%. US ANA Health is down 12%. You get Copa Holdings down 13%. Keurig Coffee is down 9%. I mean, Shake Shack is down 12%. Treehouse is down 10%. Man, this is sick. It really is. VRNS is down 25%. Man, Phoenix Companies is down 22%. There's some big hits out here, man. I mean, it's pretty intense. Whole Foods is down 9%. WellCare Health Plans is down 5%. That's pretty intense. So let's bring a few of these up. I'm going to bring up CPA first. Copa. Copa is a airline out of Brazil. This equity is off a high of 160 bucks. We'll put this back. I'm going to put this on a daily and just show you when you have high volume lows, folks, just do yourself a favor. Stay away from the equity. Wait till the equity gets down to it. If it looks good or rejects it, great. Then you can deal with it. This had a monster high volume low. The stock had gone from $117 in November, goes down, hits a low in December. Does that low, $87. Does it with 1.9 million shares. Now watch. So you're at 87. It does a counter trend bounce all the way up to 112. Which would make sense. Why? Because this baby had come off a high of 162. That's just purely, in fact, let me put this on a weekly so you can see. This is a classic. If you have the out of time in the trade, this is a classic coming up to ice, can't handle it. And, you know, the coming up to ice deal, folks, is a guy named Richard Wyckoff that figured this out. And it's amazing. I mean, because it's like, man, how does this work? And bottom line is that it's pretty consistent, folks. For some reason, and it would make sense, because what ICE actually is that that's where there was a downdraft or an updraft, either way, okay? Because ICE can be when stocks go up, too. But what it is that it likes going up to that level, and it just stays there. That's it. It can't handle anything more, and then it goes south again. That's on the way down. On the way up, what do? You go up, you back down into ICE. It looks like you're going to keep going. Bang, it stops. Bang, next move up. So what did you have out here? Well, what you had is that you have this high volume swing low. It goes up to ice. Now what do you have? Now what you have, folks, is this. And this is why I always want to wait for the test. You're going into the high volume swing low with even more volume. So we just came down from 119 rather. You're at 92. We're doing 4.3 million shares. It did 5.9 million on the weekly. We're going to do... Yeah, we're already over it. We're already at 5.9 million. So what does that set up? Well, guess what? This could be a real disaster, because your A point on this is all the way up there at 157. Your B, if I just take it, 97, so you get, what, $67? That's going to give you a $60 price point. Big problem. GMCR. Let's go take a look at Keurig Coffee. What do we have with that? Keurig's trading out at 97.76. This has the juice behind the move also. This is down off $160. Man, these things, you know, it's pretty intense. Now, this gets more intense, and this is why. We put this on a monthly. What you're going to see is that we had a false break topside. It's back in the lower range. Anything under 115 puts it back in the lower range. What does that set up? That sets up, number one, the way that it broke out when it broke topside February of 2013. The low of that is $76. It will at least tack that level because it already croaked the top of that level. The top of that level was 124. It took that apart. So what do you have? The next level down is that it very well could test the lows of that, and we'll see what it does. What you also have, though, and this is important to wrap your head around, you do not have a high volume high. You have a high that was generated out here on a monthly basis with all of 38 million shares and then 39 million shares. That little baby should have been doing like 100 million shares. That was distribution in spades, like in a huge way, not in a small way. Steak Shack, no, let's see, S-H-A-K. This is supposed to be a really cool place to go. S-H-A-K. Okay, let's see what this is saying. S-H-A-K. So this is, okay, Shake Shack, right? Roadside burgers. That's what this is. So this is an IPO, recent IPO. This goes out, it's trading down $8 right now, $8.93. They pushed it out. Oh, look at this expansion. Oh my God, this is quite a run. This thing went an IPO in January at $21. So let's see what it opened. Yeah, okay, it might have won at $21. It looks like it opened at $40. Yeah, it did. So it went at $21, opened at $40. Absolutely zero volume, okay? Ran the thing up. You're talking about, so you get a $21 IPO, you run it up to 80, they're going to give it up in spades out here. You get a market cap, okay, they take 34 million in. This is pretty sick. Okay, so check this out, folks. This is about as sick as you get. I'm telling you, man, we're at a high that is, you know, you hear all day long out here that, no, the values aren't big, this and that. That's insane. This has a $2.3 billion market cap. Okay, $2.3 billion. And they only take in $34 million a quarter. That's insane. It's totally insane because you're talking about they're in the restaurant business, okay? You're not talking about a margin business. You're not talking about a software business. You're talking about the restaurant business where you actually have to buy some food in order to sell. It's as good as you get. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to get coming back after this close. A lot of numbers are coming out. Dow Industrials are up by 95. NASDAQ up 44. 27. S&P's up 10. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's Gold Report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night. And I heard the spring is sprung up in New England. I heard it's like 85 degrees. I'm talking to my daughter. That's summer, man. Pretty good. This quote by Barbara Kingsolver. Hope is a renewable option. If you run out of it at the end of the day, you get to start all over again in the morning. Isn't that a beautiful thing? Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow up to 82, NASDAQ up 25, S&P's up 10.5. Gold contract down $7.20, trading at $1,183 an ounce. Silver off 20 cents at $16.30 an ounce. Platinum down 13 at $1,131 an ounce. Light sweet crude down 214 at 58.79 a barrel. Bonds, we had the 10-year down, 10-year up 8 ticks at 127.11. That had rejected lower price this morning. Has volume, though. What does that mean, folks? That means we're going to get a bounce in the bond market. I suspect tomorrow you'll see it go higher, and we'll see the volume start to contract. It looks to me like that top is in on bonds. If that's the case, man, that is going to be the longest bull market I've ever seen. That's a 34-year bull market, folks. That bull market started in 1981 when rates were 14.5%, goes down to 0. Bottom line, you're in a bond fund, get out. That's the bottom line. Don't even think about it. Just get out of the fund. If you want to own bonds, great. Go to the Treasury Direct, buy them off Treasury Direct. Why? What the difference specifically is that you have the bond in your hand, you get your interest payment in your hand, you're going to get your principal back. End of story. If you're in a bond fund, when I say $127.10 on a 10-year, you're paying $127 for a $100 bond. What do you think happens? The price gets destroyed, folks, on the way down. Big destruction. 30-year bond, $155.28. It was up 1 point plus 18 ticks. Same setup there. What does that mean? That means you're paying $155 for a $100 bond. If rates have bottoms, which they're at 0, so bottom line is that, yeah, can you go negative? Yeah, Europe went negative, but guess what? Europe's back into flat now. What that means is you're paying $155 for a $100 bond. Now, what happens when rates go up? Those get croaked. Treasury Direct, same type of setup. You got it in your pocket. You're going to pay the price. You're going to pay 100 cents on the dollar. That's what you pay for a bond, folks. And you get a smaller rate, but as rates go up, if you're going to do something like that, you want to be in the bond market, what you're going to want to do is you're going to want to ladder the buying of the bond structures. That means just whether it's every 4 months, every 6 months, you invest, you buy the bonds, you ladder them. What will end up happening if rates continue to go up, let's say we're at the bottom of it, rates, let's say, start going up 6 months from now. Bottom line, if it's quarter-point rate hike at a time, guess what? In the next 2 or 3 years, you'll see the rates go up 2%, 3%, whatever that is. Bottom line, if you ladder them, you're going to get that average price of them. But the real key is, which is absolutely crucial, if you're in that market, you want to get your principal back. Bonds funds, you're not going to get that principal back because the bond funds are going to get whacked extraordinaire. In fact, I heard a interview today with on CNBC. Tyler was interviewing the head of structured products, mutual funds at Schwab. And bottom line, the guy was saying, oh, I don't think it's going to be that bad. He's out of his mind. Absolutely out of his mind. King dollar. King dollar was up 550 ticks at 94.72. The euro was down 77 at 112. And the yen trading up 31 at 119.78. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Well, guess what, folks? We get a nice dead cat bounce. And what I expect you're going to see is this. Now, the market is so deviant, folks. It's so cool. It's awesome, okay? And what I mean specifically is this. You're up 83 cents today in the SPY. We had come down yesterday, and we came down hard yesterday once again. You come down with 135 million shares. Today, you go up with 85 million. Tomorrow, the jobs number's coming out. What I expect you're going to see, it's going to be a bad jobs number. Why am I saying that? Well, the ADP report come out, which is a pretty good indication where jobs are coming. That came out Yesterday, under 200,000. So that's saying, hey, you're very well going to get a bad jobs number. If you get a bad jobs number, you think the market go down? No, the market will continue to bounce. Why? Because the market will basically figure that, hey, interest rates are going to go up later. I want to bounce a little. You get a Friday, all of the above. You'll see that bounce. I suspect that bounce is going to come on light volume, and then see you don't want to be in next week. That's how this is, I suspect, is going to shake out. That's in your S&P. We go over to the NDX 100. We use the 3 Qs for the NDX 100. Same type of setup inside the 3 Qs. 3 Qs out here goes down hard. We get into the lower range. The lower range inside the 3 Qs is 109.42. You're at 107.35. We did volume today of 29 million. We went downtown yesterday with 42 million. So we'll get a bounce. Bottom line, you see anemic. Now, this is setting up a beautiful ABC structure on the way down. The price point will go after this 104.23. Small caps. We use the IWM for the small caps, and you'll see it inside the small caps. And you got to remember that the small caps led off the charge on the way down. They came down with thunder. They went from 126, the IWM, down into 120. We bounced today, the IWM, with 28 million shares after going downtown with 72 million. You can see where the force is. The force is absolutely downtown. Gold. What do we have with the gold contract? Gold's always awesome coming into a Friday. When I say awesome, it's like hold on to your seatbelts, because coming in on a Friday, volatility is out there in spades. Now, this is what we had in gold contract today. We did 126,000 contracts. We pulled back. We're down 740. You're going into 213,000 contracts. So that, to me, is building cause to go up into this 1224 area. So the gold contract, let's go over to silver. So silver's the exact setup, the exact same way. What we have with silver, and both of these, by the way, haven't been able to get out of the way. And they particularly haven't been able to get out of their way when yesterday the dollar index was down over 1,000 ticks. Today you're up 500, but bottom line was down on over 1,000 yesterday. Still couldn't get out of its way. Believe it, that is deviance extraordinaire, but that's the type of deviance that says markets want higher price. I know it's sick, folks, okay, but that's what they like to do. What I love seeing is that it's so far out of whack like it was yesterday. Because when it's so far out of whack like that, you have the shot that it absolutely makes no sense. When it makes no sense on a fundamental basis, but on a technical basis, it's the setups there, which we have both in the gold and silver market. That is the ultimate, because when I say fundamental versus technical, when the dollar gets weaker, all commodities are going to get stronger. In particular, gold and silver are priced in U.S. dollars across the world. Silver. Silver's down 20 cents today, 35,000 contracts. 35,000 contracts is going into 42,000. Silver also wants higher price. Now, let's go take a look at the TLT. The TLT we use for the 20-year bond fund. The TLT bounces out here today. We bounce with lighter volume. It looks like the TLT is going to set up a monster ABC structure on the way down. Now, this is a total change in dynamics inside the bond market. We've come off the high twice. The high in the TLT is 138. We're at 122. You've had two legs down in the market thus far. Both legs have volume on the way down. The only day that we had volume on the way back up was March 18th. It didn't hit a swing point. But you did get the volume in it. We'll see whether they get any volume on this bounce. I suspect we're not going to get any volume, number one. And I do expect that you're going to see a decent bounce out here. It doesn't have to be huge, but it'll be a decent bounce. I mean, the TLT can bounce to like 124.10, somewhere up into that area. Now, King Dollar. Let's go take a look at King Dollar. What did King Dollar do? What King Dollar has done, folks, is this. King Dollar got into lower lows, blew out the swing point, monster volume on the move. Where today we go up, and you go up with 565 ticks, 43,000 contracts. King Dollar is building cause to get into the 94, 92, 89 level. King Dollar is done, folks. King Dollar topped out in March 13th. You stay right there, folks, and we'll be coming back with a lot of numbers. We're coming back with our man, Mr. Andy Heck. We'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished up 82, NASDAQ up 25, S&P's up 9.5. And as we do each and every Thursday at 20 past the hour, we get our man, Mr. Andy Hecht. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, Andy does an outstanding program, 5 to 6 Eastern Standard Time. Also has a great newsletter. It's the Technomento Commodity Report. You can test drive it right here, right now. The way you do it, come over to our website at TFNN. Go to newsletters, go to trading newsletters, see the Technomento Commodity Report right there. Andy Hecht, what's going on?
Hey, how are you, Tom?
I'm doing great, man. How you been?
I'm good. It's good to be back.
It's a beautiful thing, man. Totally.
Good to be back. I was on the other coast of Florida from you for 10 days. It was very nice.
And yeah, you got outstanding weather. We've had amazing weather, right? Meaning no humidity.
We only had two days of rain, but it's nice to see rain because I never see it out here.
Yeah. Isn't that cool, man?
So that was fun, and had a great anniversary party for my folks.
That is so cool.
Had the whole family there. It was a great time, really a great time.
And that's the first time that you've had your brother lives in South Africa. Where's your brother?
No, he lives in Australia.
Australia. So I knew it was a long way away. Okay, cool.
Yeah, I hadn't seen my two of my nephews for 13 years, so it was great. It was great.
And how old are they?
They are 26 and 23.
Oh, that's cool. Then you didn't miss a beat. Isn't that weird? I know. Isn't that crazy?
It was really good. It was really good.
Yeah.
It was really amazing. And to have, for my parents to have all their grandchildren together, was unbelievable.
That is unbelievable. That's so cool.
It was really, really good. It was a lot of fun. And I was away, and the dollar went down, and it's all very interesting to me.
Oh yeah.
It's all very interesting. I mean. I thought about things while I was away. First of all, I'm looking at these commodity markets, and the only ones that really, really reacted to the dollar in lockstep were the base metals.
Yeah.
Copper did, aluminum, nickel, lead, zinc. They all kind of. Oil did too, but I think oil's got a lot of other things going on for it. Gold, though, dead, man. It's like watching paint dry.
Yeah, there's no doubt.
Is it,
I can tell you, well, I like it anyway, and I've liked it in this consolidation, but I really like what it did yesterday because it did nothing, and the dollar was down 1,000 ticks, and it was breaking with volume. So it's like, okay, that's a good scene because bottom line is that the market's so deviant. That's what markets like to do.
Yeah. Well, we'll see. I mean, for me, gold right now, it's like 11.75 to 12 and a quarter.
Yeah.
And it's like, call me when it breaks out one way or the other.
Yeah.
You know what I mean? It just feels like it feels like everything. I'm kind of even more so more dedicated to the proposition here that 2015 is a year for traders, not a year for investors. And buying dips, selling rallies makes a hell of a lot of sense to me, given the volatility. Now what we're seeing with the bond markets is really interesting.
That's intense. Yeah.
That worries me. I mean, if interest rates are going to start to go up now, that does not bode well for commodity prices in general. And I think, what you're seeing today in oil, you got oil got up to over $62 yesterday.
Right.
I expect oil probably to go back down to the mid to low 50s here. I mean, we're partially the way there today. Everything seems to be everyone gets excited. They rush in, they rush out. I think you watch open interest. When it builds up too much to one side, go the other way. That's what the markets feel like to me.
Yeah. Well, there's no doubt as to the longer-term trends, and the bond market, I'd say, that's going to dictate it. I think also in the dollar. I mean, my take is that the dollar's topped out for a while here.
Okay.
We'll see how that shakes out. What is really, and here's the disconnect though, which is really yielded, and this is what we all have to figure out, is that with the bond market topping out, let's say the bond market's topped out, and rates are going to go up. Well, if rates are going to go up, it would make sense that the dollar is going to go to the moon, not down. Okay, and the bottom line, that dynamic has changed. I'm just saying technically, okay?
Right. No, I understand.
So it's like, okay, I'm trying to figure out what the heck is going on with that. You see what I'm saying? It's
like, I think tomorrow is an important day. You know why? You got this jobs report coming out.
Yes.
And, this is whether the Fed's going to raise or lower rate, I kind of, my gut's telling me we're going to get a bad jobs report tomorrow for some reason.
The ADP came out bad. That was Wednesday. Right. So I suspect we're going to get a bad report too. Right.
And a bad report is going to be just more kind of, easing. It's not, it's going to take away from that.
Right.
So, that's not a positive for the dollar. But hey, the hijinks with Greece and all the insanity in Europe,
right?
That goes the other way. So things are being pulled in two directions. So I don't expect things. I think we're in ranges here. I think, you're going to see the dollar. Hey, can we go a few points lower than here? Yeah. Can we go higher than here? Yeah. I just think things are going to trading. I'd rather trade something 10 times back and forth for X number of ticks.
Oh, no doubt.
It's much easier to do that than to ride along a trend. Nothing's trending.
Yeah. No, well, no, that's I guess that's my point, that I think the trends have changed.
Okay.
But we'll find out.
We'll find out.
There's no doubt. Large consolidations are awesome to trade. I absolutely agree with you, and we'll know pretty quickly. I mean,
we will. We'll. I'm looking at the markets here. I look at gold, right?
Yeah.
So gold's $8 off the low of the range.
Sure.
So you're probably right. It's probably a buy here. Copper's at the dead highs of the range. It's probably a sale here. And I go through all of these markets. Oil's close to the top. It's probably a sale here. I just look at these things, and I don't see big volumes trading. I don't see big changes in open interest here, which just tells me, the markets are as confused as we are. You know what I mean? So, I hear what you're saying. I do hear what you're saying about a change in the trend, particularly in the bonds and the dollar. And hey, at the end of the day, if that did happen, it's going to have big ramifications for everything across the board.
Yeah, it is. And I guess what we don't know is that, when rates start going up, folks, okay, what is it, what is the structure, because particularly what has happened thus far is this, is that the Fed is saying, okay, they want to raise rates, but I'm still in the camp that, guess what, they're not going to be able to raise rates because everything's still pretty slow, but the market itself wants to raise them. That's kind of what's going on. Do you know what I mean?
The market does want to raise them. And you know what? If the Fed does anything, all they're going to do, Tom, is 25 basis points symbolic, which is tiny. But, hey, on a percentage basis of total rates, it's big.
Yes.
So it's kind of priced in here. It's not like the Fed's going to come out and start raising at every meeting here. They do. If they do one, it'll be a lot in 2015. And I think they'll probably do it in September. That's kind of what my gut tells me, particularly if this jobs report comes out lousy, because I think that's the thing that they look at first and foremost is employment.
Oh, there's no doubt. And what they have to get going in order to get rates up, folks, is that inflation has to come in. Right. And the bottom line is that if the market continues to pull back, what's going to happen is that balance sheets are going to get deflated in a big way. So it's like, okay.
I'll tell you one thing I don't like. I do not like the action in the stock market here.
Yeah.
I think that looks like, it's waiting to be pushed off the end of a cliff.
Well, I agree. I just brought up, and you hear all day long that, the market's, fairly valued. I just brought up, there's one stock, Shake Shack, okay? It was getting hit out here today. But, this is a new IPO. It's amazing. It's like, it's a $2.6 billion market cap, and they only take in $34 million a...
That's unbelievable. That's too juiced.
And they sell hamburgers.
It's too juiced.
Hey, can you stay here with us a second?
Yeah, absolutely.
Awesome.
We'll go through some commodities.
Awesome. We got our man, Mr. Andy Heck, folks. We want to talk to you. Our phone number is 877-927-6648. Give us a call, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Heck. We're talking commodities. And don't forget, folks, every Tuesday, Thursday, right after my program, half hour from now, Andy has a great program right here at TFNN. Now, all our programming, folks, you can get right on your cell phone, and it comes across great. It's TFNN.mobi, TFNN.mobi. When you hit that on your browser, just give it about 30 seconds. It'll stream in. We stream 24 hours a day. That gives you the full audio. If you'd like to get the video, right in your browser, put TFNN.com. On the right-hand side, when that comes up, see a little box with mobile devices. Hit it. Our service will understand what device you're on. You'll get the TV plus the audio delivered to your device. So we have bonds. Rates go up. The dollar should go up. Doesn't look like it wants to, but I understand it should. You were talking that if rates go up, you think that commodities would get hurt, right?
It's potential. It costs more to carry them, and there are some huge surpluses out there.
Yeah.
So that could cause some selling initially in the market.
Sure.
I think the knee-jerk reaction is to sell them. Now, if rates really spike because the inflation quotient goes up,
yeah,
the inflation portion, then that's a totally different story here. But, Tom, the beauty of commodities is, if you look at the fundamentals, you can pick and choose, and you can see different areas of opportunity. And one of the things I wanted to bring up and talk to you about today a little bit was coffee.
Okay.
Because coffee's gotten trashed. Coffee's down was like $1.30 a pound, and demand for coffee is growing. These Starbucks are popping up everywhere.
Yeah, they are.
I mean, they've been here, but if you go to Asia and China, everywhere, and demand for coffee is growing by leaps and bounds. So right now, I think this is a great level for coffee, for a long in coffee and a scale down buying. I mean, could it go lower? Anything's possible in these markets. However, if you look at this weekly chart here I have up, I think that, around 126 is a really nice bottom for coffee, and I don't even think we'll get there. I think this is kind of a good level. So I'm kind of positive for coffee. That's the chart that I have up there is a weekly.
Okay.
Now, if I go back to the dailies and I go to cocoa, cocoa's looking interesting. That's a demand-based rally. I'm looking at stuff where demand is growing here.
Yes.
I'm trying to strip out what the bonds are going to affect, what the dollar's going to affect, and I'm looking for the best opportunities here in terms of what the supply and demand quotient is telling us. The other thing I think that could be really interesting later this summer, is grains.
Okay.
Because you know what? The grains have gotten trashed. You got corn down at $3.60. You got soybeans under $10. You got wheat, is at the lowest level since 2010. And everyone's assuming we're going to have a third year of bumper harvests in these things. So what I think is the downside is fairly limited, and that bumper harvest is built into price. But any kind of problem, any kind of dry conditions, any kind of growing crop diseases, that is not in the price here. So I think it's a low risk, high reward, long, maybe with a call option or something like that, particularly in something like soybeans where they're planting less this year because of the corn-soybean ratio. I think these are very interesting markets, and you have to be very selective here, I think. If you're going to trade the other ones, the oils, the gold, the coppers, in my opinion, you buy them when they're at the bottom of their short-term or medium-term ranges. You sell them when they're close to the top, and you be very quick to take the profits because they can disappear very, very quickly in these kind of market conditions. This is really an environment for nimble trading.
It's going to be really cool watching how this shakes out. When we were just bringing up those charts, I mean, it looks like not only gold, silver, but I mean, all these commodities look like they've been in a vicious bear for like a couple of years.
They have been since 2011.
Yeah.
Vicious. And look, sugar, 36 cents
right
to 13 cents. You got cotton, $2.27 to 65 cents. Gold, 1,900 to just under 1,200 bucks.
So watch. So now this gets interesting because if in fact, so they come down dramatically, but yet rates have come down to zero too when you look at that. So it's like, okay, where does that disconnect, right? I mean,
it is a disconnect, but you also have to remember that prior to 2004, these commodities are still much higher than they ever were before that.
I got it. So, cool. Right. Because that was the super run that basically started, folks, in 2002, 2004. There's no doubt about that. Yeah.
Right.
Cool.
Right. I mean, look at something like copper. It never traded above $1.60. Now, we're saying it's cheap at $2.90, right?
Yeah.
Because it was $4. Gold was, 800 in 1980, 850. We're at 1,200. We're saying that, it's cheap, and it was because it was 1900. I think there is a disconnect, and I think you're right, but I think you also have to factor into that where these things are compared to where they were pre this huge bull market cycle that we had.
No, I agree. It's so crazy, Andy and folks, is that I'm going to bring this copper back for a second because in 1980, let me bring this up. No, yeah, of course. 19, I can't go back that far. That's too bad. Hold on 1 second. 30 years.
Let me see how far I can go back.
No, I can only go back. Okay. Because, what's funny is that I had a house that I had built in South Boston, actually on the water. Mm-hmm. And this was in 1985. I put on the top of it this huge pure copper cupola with glass. And there's no way at that point. I think that cost me about $18,000. There's no way you could do that.
But what was the copper price there? 80 cents a pound?
I think it was 82 cents. That's what I was trying to find.
That was, by the way, copper from 1980. I started trading commodities in 1980.
Okay.
From 1980 to 2000, it was between 80 cents and $1.20. That was kind of the range.
Right.
So it was probably 80 cents.
Right.
Yeah. It's amazing. It's amazing how high these things are now compared to back then. And I have to pinch myself every once in a while, not to be too bearish, because we're definitely in a new world. But I'll tell you one thing that I'm sure of. In the next commodity bull cycle, the fact that we've pushed the commodity trading companies away from U.S. shores means that the big powerhouses are going to manipulate these markets more than they ever have in the past, because there is really no fear of recrimination.
Yeah. Oh, listen, man. If I've learned anything, and the banks have learned anything, and those large players have learned anything, it's just a matter of how much you pay for a fine, right? I mean,
But they're not even going to pay fines.
No, they're not. No, I agree.
The Swiss government ain't going to fine them, right?
No. There's no doubt. I mean, that the amazing thing, folks. Okay, you talk about how time goes fast. I remember bringing up the aspect that, okay, so we went to the mortgage crisis. Their banks are paying all the vig on the mortgage, and now the currency manipulation. The currency manipulation, folks. First time we brought it up was 7 years ago. Now, it's finally going to court. 7 years later. It's like, you got to be kidding me, man. It takes them 7 years. And of course,
it's stale already.
Yeah, I know, man.
It is. Hey, by the way, I got this chart up here.
Yeah.
In 1986, the copper price was 56 cents a pound.
Wow. So,
you know what? $2.91, man. It doesn't sound so cheap now to me. That's what I struggle with.
Yeah, that's expensive.
So that copper roof at 18 grand.
Yeah.
Basically, today you're paying close to 100 grand. For that.
Listen, I know. When I go buy the house, right? I look at it. I says, man, you can take down the roof and get a good little score for yourself, man.
Oh, by the way, one of the big things that's been problematic, even is today, is that a lot of vandals steal copper and sell it for scrap.
Oh yeah,
wires and stuff, and that happens a lot. It's because of the values. That never happened in 1986 at 60 cents a pound or below.
Yeah.
Now it's it's a business, right?
Oh man, forget it, no doubt. So what in Vegas now? Well, you weren't there for the fight. That was. No,
I was not there. I was very happy I missed that, because that was a crazy week. But they did make some money here, which is good.
Yeah,
the fight itself wasn't so interesting. I think the post-fight was more interesting.
Yeah, no, it was. There's no doubt about that.
I was rooting for Manny Pacquiao.
I think all of us were. Yeah, I mean, Hey, and did you see that the aspect he had a toured rotator cuff, man?
Yeah, I know. He went into it, and they wouldn't even let him take an anti-inflammatory. So what this is all doing is this is building up for the rematch, because these guys put $300 million in their pockets between the two of them.
Is that wild or what?
They'd be crazy not to fight again.
Oh, totally, man.
I mean, and by the way, Vegas made a fortune. I heard, from my friends here.
Yeah.
The place was unbelievable last weekend. Hotel rooms were $2 grand a pop.
I know. I was looking at the rates, folks, went up by 300%. Across the board.
Vegas needed it, because since the meltdown, it's been slow. This fight definitely picked up the economy here.
That's good.
So that's a good thing.
Okay,
and the weather's good. That's the best thing.
Yeah, listen, man, it's a beautiful thing. Well, listen, we're glad you're back growling and prowling with us, and we look forward to the show in a little bit.
I'll be on.
Okay,
See you next week.
That's right. Okay. Stay right there, folks. So Andy's going to be coming up next, 5 to 6 o'clock Eastern Standard Time, folks, as he does every Tuesday and every Thursday. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to come right back. Dow finished up 82. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Let's go over to SMF. So SMF, folks, is Sprouts Farmers Market, and this little baby closed at $30.21. It's trading right now at $27.35. Numbers go like this. So the estimate was 26 cents. They took 25 in. They missed it by a penny. They missed their comp numbers. Bottom line is that they're taking this thing to the cleaners. And not that, you know, it's only 10% down, but check this out. When you actually take a look at this, what you have is that this equity, they push stock out at $30, $29, $35. You have a market cap out here of, let's see, 4.6. My God, how do these things? You get a market cap of 4 point. Oh, well, they took in the market 4.5 billion, but they take in 3.6. So that's decent in that aspect. But watch this. This equity is off its high of 38 bucks. So now we're dealing at 27. We bring this back a little, and what are we looking at? Well, put this on a 3-year weekly. You're looking at a monster ABC down. You know, this came off a high of, man, these people get taken to the cleaners here. So it's been out as a public entity for about 3 years. Most people earn it at about 41 bucks. It goes up to 50, 49, the 45 to be exact. Comes down with monster volume. So it has a high volume swing low May of 2014. That's $31.10. Now, what we're going to do here, no, $25.73. It's going to go after that high volume swing low. Thus far, we've done 10 million shares. The high volume swing low is 15 million. Today it did 4.6 million. This is going to go after it tomorrow. And if you break that, and we have the juice behind the move, guess what? You get a monster ABC structure on the way down. NVIDIA. So let's take a look at NVIDIA. We happen to be short NVIDIA right now. Now, NVIDIA, the low for the year is 16, the high is 23. This was up 39 cents today. It's trading down about 20 cents, 30 cents. That's what it was up today. They missed their numbers. The way that NVIDIA, the estimate was 1.1 billion. Revenue, they took in 1.15. It was 1.16. Earnings per share, 34 cents versus 33 cents. They're going to buy back 1.8 billion in stock. And what you'll see out here, and this is going to be cool watching this baby shake out, because what you have is this. NVIDIA came off its high, had juice on the way down. So we hit a high on a weekly basis with 43 million. You come off that high with 48. You go up and test that high again with 28. What do you have out here? Well, you have a swing point down at the $20 level that wants to get tested. And we'll see, in fact, how it gets tested, because that's on the shorter term basis. When you go take a look at this and we put this on a monthly, on a longer term basis, what you've done is that you're going into, and this is where, you know, the setup is pretty extraordinary. You're going into the downdraft that had been created in 2011. And that downdraft, we came down and with 690 million shares. When we went up and tested that, folks, we tested with 182 million versus 690. So that setup is saying, guess what? That's huge distribution up there. You're going to get an equity that wants to basically move into lower price. We go over and take a look at one of the UBNT. We take a Ubiquitous Networks. This is a portfolio of wireless networking products. This closed at $28.35. It's trading at $27.50. It's been as low as $26.50. Numbers go like this inside it. Earnings per share, 47 cents. The revenue was 147 million. This little baby is going to go after its lower part of the consolidation that it's been trading in. This also is off the highs of $60. You're at 28. You know what's amazing? Looking at many of these equities that, you know, basically bringing up. We have the S&Ps still at highs. I mean, the bottom line is that when you take a look at, you know, the cash S&P, the cash S&P is at 2088. Well, the high is 21.19. So what are you're all of, what's that, 10, 29? You have 30 points off the high. But yet, when you bring up the individual stocks, these stocks have got killed. You know, we're talking about down 20, 30, 40%. Now, what does that set up? Well, what that sets up, folks, is that as folks are getting their statements, which, okay, it's the 7th, it's the 8th, rather. When they're getting their statements and opening up this, it's the 7th. When they're getting the statements and open up their statements, they're going to be looking and say, hold it, the market's flat. Why am I down? And what that's going to have to do with, it's going to have to do with the amount of equities that absolutely get smoked on the way down versus how we have gone up or how certain equities have gone to higher price, because you can see, no doubt, that inside, if the S&P is still up there, well, there's some stocks that have absolutely up at higher price. Now, find them, that's a lot harder, finding what is still up there. Well, Apple's still up there. You know, Google certainly isn't. Bottom line is that when you take a look at Google, Amazon, AMZN, well, Amazon, you talk about a pump. We got to look at Amazon, because you had a broker today come out with Amazon with a $600 price point. It's like, oh, yeah, really? So Amazon was $36 in 2007. Listen, we love Amazon. Bottom line, love it. Okay, Amazon Prime. It doesn't matter what we order. You can order bathtubs, you can order toilets, you can order anything. Zero cost. How good is that? And particularly, you know, inside, when you're ordering large things like that, the amazing part about it is that you're not sending someone down to Home Depot or Lowe's, picking something up, paying for it. You're always paid to get stuff delivered. Bottom line, not with Amazon Prime, and they don't care how big it is. And if you've never done it, folks, check it out, because what is amazing, they have it together in a huge way. So when you order something, I believe it's over 200 pounds, what happens is that you get an email. They give you a 4-hour window. They call you 2 hours before that 4-hour window, and they narrow it down to like 45 minutes. It's just an amazing setup. And bottom line, you know, that being said, I don't know how they're making money on it, but Amazon, folks, is not going to $600, okay? Not right now. Amazon's going downtown right now. You stay right there, man. Mr. Andy Heck is going to be coming up, growling and prowling with you for the next hour. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Stay tuned. Andy's coming right up. Go get him, folks.
Tiger TV.